The gains in 4 of the 5 major markets hid the volatility that took place last week. The S&P 500 was down nearly 3% on Monday alone, only to see the index recover all the losses to close the week with a gain of 51 basis points. As of Friday's close, the blue chip index had recovered enough to sit with a loss of 2% from the all-time highs set back on September 2nd. The returns were all over the board, with energy adding 4.7% for the week, followed by financials at 2.21%. Real estate and utilities were the worst performers, with losses of 1.51% and 1.2% respectively. Monday's losses were carried by the headlines about Evergrande in China. Headlines about the Chinese real estate conglomerate with $300 billion in debt, which is now in default of at least some of its liability payments, led to fears of a potential global contagion. These concerns hung over the markets throughout the week. Yet Fed Chairman Jerome Powell played down the risk in the midweek post-FOMC meeting press conference, saying, "The Evergrande situation seems very particular to China, which has very high debt for an emerging economy." In further news from the midweek FOMC statement, the Fed's dot plot, a chart used to indicate anticipated future Fed funds rates, indicated a greater possibility of rate increases in 2022, which was earlier than previously indicated. This news seemed to reassure the markets. The idea that future rate increases were not too far off could be viewed as a positive sign to the health of the markets, despite concerns overseas with issues like the Evergrande default. In the end, time will tell. Finally, the yield curve steepened again last week as the 10-year added 10 basis points to close at 1.47%. Meanwhile, the 30-year yield returned to the 2% level after spending virtually all of the third quarter below 2%.